Hello everybody, welcome to TraderMerlin Show. It is your Thursday edition. Hope you had a good session out there today. And for those that I saw in my signature series, I cannot say those words together. It is an absolute tongue twister. Signature Series Showcase. Whew, don't ever ask me to that one again. Today we were with Bill Addis. Tomorrow we'll be with Sean Reed. It'll be pretty exciting talking options. So if you guys are part of the OTA community and want to know more about the Signature Series, check that one out tomorrow at 10 a.m. Today is going to be a little bit of a different topic. Normally we have Larry on. We talk about portfolios and look at long-term perspectives of individual securities, which we may do today, depending on what you guys like to look at. But today we're going to talk about feast or famine. Yes, the year's almost done, 2020 coming to a close, and the roadmap might be leading us to a feast type of market or a famine type of market in 2021. To help me break it all down, we've got none other than Larry Jacobson. Larry, how you doing, my friend?
I'm great, Merlin. Great to be back on the show with you, my friend.
You know what? I just looked at the Skype call, and it's been 2.5 months since you've been on. I'm a little disappointed.
Not true. We did the election show a couple of weeks ago. I know you get older. You see how your mind goes.
Fine. How did I not Skype you in that one? I don't know how we did.
Well, we haven't done an official TraderMerlin where I'm not physically in the same location with you. Yes, we were not social distancing, but that's okay because it was just the two of us, right?
Just the two of us, Larry. All right, well, let's talk about that. Obviously, we had an election special, which talked about some of the areas. Some of those areas have done phenomenally well since then. We talked about the cannabis area. What, I don't know, get some major takeaways or anything that you want to look at from 2020 as we wrap up here that's noteworthy that we should be paying attention to.
Well, you and I were talking just before we came on the show, and I don't know if you want to bring up the chart of the VIX, because this is something that I think you were asking me a question about anyway. It might be a great little kind of segue here, and I'm looking at my screen as well. So what I want to point out here is that for the longest time, you tell me when the chart's up. So
It'll be up just a second. I had you listed as a Bloomberg reporter. I had to take that off the screen there real quick.
Yeah.
Hey, you know what? You're a university professor. Why not? What's wrong with a little?
That's true. That's true.
All right, where the heck did I put my VIX? My VIX is no longer on here. That's really entertaining.
Sing a song.
No, we're not going to sing any song. We're going to just put VIX up here, and we'll find a way to make it happen. Okay, here we go. There's your VIX. I'll bring it up full screen for the viewers. Looks like an EKG. Of course, you had a little bit of a heart attack back in 2008.
Let's bring up the weekly chart because I think that's where the story is right now. So looking at a weekly chart, you can see where there were major areas that people reacted. And so, yes, the last time we saw 2020 at that height was back in 2008. Well, we know that in February, we got hit with the COVID news for the very first time. Now, notice we had a huge impulsive move. There was an impulsion on the VIX. Now, you understand how this works is the VIX works opposite of the actual index. So when that VIX was rallying, it meant we saw that huge sell-off, drop-off on the SPX. And again, just for full disclosure, the VIX is really used to help measure a fear factor on just the 500 stocks in the S&P 500. But it's a good indicator, since we're looking at the broader market right now, that we're kind of pulling back to where we had the lows just before that first impulsion. Now, what are we hearing? All right, we started to hear already in the news. You've heard it. I've heard it. They're already starting to plant the seed that we're going into a more horrific COVID process right now, right? So what that's saying to me is it's interesting how that's now starting around the same time the VIX is getting back close to where we saw this in end of February. And so I'm looking at this, that when the VIX gets down to that area again, and you can circle it, we're starting to see all this buying down here, and we had this huge rally. I mean, if you think about it, with the exception of maybe 2008, right? We basically have broken through the 2015 high on the VIX. We didn't get as high on 2018, but we have definitely exploded through most of those highs with the 2020 drop. So who's to say we're not going to see that? Now, you asked a question about the post-election. Well, we already know that Joe Biden is planning to have everybody wear masks. I think they're going to get a little bit tougher as best as they can on managing this. But is this just another setup that's going to say, okay, when price gets down here? So I like to look at this because as an option trader that I am, I'm not happy that we have such low volatility right now. It doesn't really get me the premium that I like, but I would love to see another explosive move. So these are the times, and we started to see a little bit of a sell-off yesterday, that are we going to get another corrective move up, and I'm waiting for the downtrend. That to me signals all bets are off. So there's another opportunity here maybe to test around that high that we had prior to yesterday on the SPX and see if there's another opportunity. So you could short, you could go into long puts. And when I'm seeing this kind of all-time high activity, I'm not looking just to put on a credit spread at this point. I'm looking to put on something that I think is going to move. So I know you and I talk about that a lot, but that's one thing I've looked at is the VIX. Another thing I'm taking a look at, if you want to bring up the IYR chart.
Sure.
Okay, because I'm thinking we might have a perfect storm here, right? There's things that no one's really been addressing. So if you look at the IYR chart, you'll see what just happened, okay, a few weeks ago. Tell me when you get there.
Yep, we're there. We got it full screen for you.
Great. So we've got a retest right up to where I'm considering a nice area of supply. You see that big drop-based drop that we had there that took out all that demand to the left? So we came up here, price just kissed that area and started to pull away again. Well, IYR measures real estate. So there's all these different bubbles that we keep hearing about, right? The stock market, the bond market, the real estate market. We've had virtually no inflation. And who's to say what's going to happen into the new year right now? Will they start dealing with interest rates again, or will inflation start to creep up? And if that happens, then we will see an effect into the bond market. And the last one I just kind of stared at real quickly, if you want to bring up the TY. I'm just looking at the TY right now.
Yeah, let me see if I get that one on this one.
It would be the /ZNH21:XCBT.
My click isn't working.
Okay. Well, anyway, we're starting to kind of crawl back up. We got a little bit more room, I think, here. I'm looking at probably around the 138.2 on the 10-year. But again, this is the things we need to keep focused on is what's happening. And the news is just going to be something that they're going to utilize. Like, all of a sudden, is interesting. We saw the sell-off, and then I started hearing about the anaphylactic shock that some of the people went into in the UK after taking the Pfizer vaccine. They're saying if you have a lot of allergies, you don't want to take this. It's going to be a bad thing. And so it's just fascinating how the news and how things are playing together. But we have to accept the fact that the market's overbought, and it's just a matter of time. And usually we get this big present. We got it back in 2008 of these major corrections that happened in the new year when Obama took office. And now here we've got Biden taking office. And I think we just have to have some trepidation in what we think is going to happen into the new year. So when we talked about feast or famine, to me, it's feast if you know what you're doing. It's famine if you don't know what you're doing. And so, again, we don't know what's going to happen, and we don't know what we don't know. But at the same time, if I had to go back to the VIX and someone would have said at the middle of February, hey, you just took out your girlfriend or your boyfriend, significant other, partner, whatever, at Valentine's Day, it's going to be a great year. Bam. And it just fell off the cliff, didn't it? And so I think we just have to be aware. We have to be very careful. We've got to not over-position ourselves right now. There's no need to do that. And the biggest thing that most people have to do right now from a psychological standpoint is be patient and wait for the market to help you decide what to do. Because there are a lot of people right now that are just so fearful that the market's going to tear up or whatever. They're going to jump in at the wrong time. And I'm seeing this with stocks all the time. You got to be patient and let price come to you. So I don't know if you have that same opinion, but that's kind of my opinion going into 2021.
It's interesting. I do on quite a few of those points. It was funny because I was actually asked by a publication to give some thoughts on the vaccine, and I'm going to read exactly what I wrote because I thought it was kind of funny. I said, every day we see ads for FDA-approved drugs that have gone through a rigorous series of tests and trials to get to market. Take prednisone, for example. It helps with a variety of ailments, including blood disorders, breathing problems, severe allergies, skin disease, and much more. However, the side effects are retention of sodium, weight gain, high blood pressure, loss of potassium, headaches, muscle weakness, nausea, vomiting, aches, thinning skin, restlessness, and falling asleep, and acne. And I go,
that sounds like me now. I haven't even taken the vaccine.
Just add coffee. At a certain point, you got to go. Are the drawbacks for me taking something worse than the symptoms of actually having whatever it is? And of course, we know that the COVID issue is ultimately death, but is the fatality rate low enough where we don't have, that people are kind of look at this vaccine and go, what did I say? Prednisone has been tested for years, gone through to final stuff. These drugs have been rushed through. My concern is that they will have a certain part of the group and I polled our audience, and some of them are saying, I'm going to be first in line. Others saying, no way in hell you're going to get me in there. I'm in the no way in hell category because I just don't, I don't want to have a list down the road of all these side effects and health problems. And, the 2 a.m. infomercial, did you get the COVID vaccine in 2020? Call our lawyers today. We can help. I just feel like that's coming.
1-800-MERLIN.
Well, it's crazy for, my issue isn't that it's priced in, because I believe that the vaccine is priced into the market. I think what will probably happen is when it is official and FDA says, yes, go for it, America, you'll get a jump up in the markets, and then it'll start coming down, because a lot of people are going to be resistant to this one. Are you going to get the vaccine, or are you okay with it?
I'm on a hold pattern, but what's starting to happen, and I read something, I don't know, you never know if it's true or not, but airlines may not allow you to fly unless you've taken the vaccine. So if all of a sudden there's going to be this push to force somebody, it's going to be a very different year for people who are resistant to taking the vaccine versus people who do. And so I know there's a lot of philosophical, a lot of ethical discussions going on around all of this, but I agree. And in fact, my wife and I were talking about it the other day, and she's pretty familiar, having been an EMT, and she said to me, this is the fastest we've ever seen a vaccine produced.
Right. Yep.
Think about it. Normally it takes years, and this has taken months. So we don't know what we don't know, and there are some people who are going to be testing it. But the ultimate is there enough of a sample that we can cover every facet of the population where this is not a unforeseen consequence of taking like you're talking about?
Yeah, and I'm watching some chat come through here. Lisa says, I read this the same, that can the airlines really make you get a vaccine? No, they can't make you get a vaccine. What they can say is, you cannot come on our airplanes without a vaccine. That's the same as the right to refuse business. And what I think going forward, when we talk about feast or famine, I think from the grand perspective, what this is going to be a disruptor. Markets don't really like disruptors, and you don't know, let's say that United Airlines comes out with a blanket statement and says, hey, you know what? You guys have to get on it. You have to certify, show a document that you have gotten this vaccine. What's that going to do to their sales? Yes, there will be people who are flying, but those people are probably flying anyway. And then you're going to get a whole bunch of people like myself and go, you know what? I'm not flying for a while, or I'll go to another airline that will be more lenient. So you're going to start to see these, I'm not going to say predatory practices, where one airline will go, hey, just come on our airline. You don't have to just wear a mask. You're cool. Others will say you have to have a mask on. I saw someone in here typing about the potential for New York making the mandatory vaccine. I don't think you can force on people. I don't know if you can legally force someone to inject themselves with something. That would be, I think you'd see a lot of protests in the U.S. But again, that starts to get to the disruptive phase of the market, which I think for all of us is opportunity, because what that will do will create more active swings for the markets going forward. So that one I definitely agree with.
Yeah, and I think, there's just interesting little things, like if you bring up WGO, you'll get a laugh when you see what the symbol is. But look what we started to see in 2020.
Winnebago, huh?
Winnebagos. People now are deciding to live in them, retire in them, and travel in them, right? You basically got Wi-Fi. They've got TVs. They've got beds. Go buy a Winnebago and live anywhere in the country you want to live.
Sure,
you don't have resident of the United States, America.
Yeah. Knows that the military will be taking, of course, that's a government agency. You are going to be told what to do and when to do it and how to do it. So, that's just part of that job. But, I can tell you right now that if my employer was to come to me and say, hey, you have to take this vaccine or you can't come to the office, I'll be okay. I will wait at home. I'll work from home for a while. I'm not saying I would never get this thing, but I need a couple years of trial and tests on this. I just don't trust it. So for me, that is certainly one of the major ones. I think, we have President-elect Biden. Still don't know 100% the outcome there, but I think it's looking more and more like each day that Biden will take over office. there still are some issues there going forward as far as identifying what his policies truly will be, how those policies will be implemented, how the taxes are going to change. And I think that, again, poses a wild card probably for the first quarter or two of next year till we let that dust settle. But I think after that, we should probably be doing all right.
Yeah, no, I agree. And even funny, when we started talking about if there had been a Biden election result, what are the different sectors or industries that might profit? And lo and behold, what's been happening in December is the House has put up a bill to pass the decriminalization of marijuana.
Right.
So it's not, and that's very, very important to understand the difference here. They're not saying they're legalizing it for recreational use. They're just decriminalizing it federally, which means it's now up to the states and how they want to regulate that. But they're taking it off a potentially Section 1 drug. It's as bad as heroin.
That's crazy. It's as bad as crystal meth and heroin. It's like, really? I know people who've been on crystal meth, and their teeth fall out, and they start stealing shit. They look like monsters, and basically a stoner's going to sit there and forget what day it is and get fat eating junk food. I mean, come on, these are two different animals.
The stoner's just going to say, it's over there, take it. Or have you noticed more of the Taco Bell commercials with the stoner boxes again? They've been kind of populating again, those commercials.
Target marketing, right?
Jack in the Box and Taco Bell are leading the way.
Love it, love it. All right, so the two things you mentioned, obviously VIX. I'm in agreement with the VIX. I want to keep watching the VIX. When we look at it, and obviously it's dropping down to those kind of more calm levels. That just kind of tells you guys that fear has been thrown out the window. Let me bring up the VIX here just again so we can check that one out, so I can throw on my 2 cents. I forget which screen I got here. All right, there's the VIX. So let me bring it up for you. Just so you guys understand, and some might not understand how to read the VIX, generally VIX is going to stay between this range. It used to be 20 and 40 when I got started trading, 20 and 40. Now it's clearly changed. 20 would be a situation where when VIX is low, time to go, meaning you should start thinking about potentially selling your positions. And if it was over 40, VIX is high, time to buy. It was saying the markets have sold off. That'd be a buy point. So this is going to be inverse from the actions that they historically told you to do. Now you're seeing it, we were down in the teens, right? I think we at one point got below 10 on the VIX back in 2018. This might be our historical norm, but what this basically means is if we get down below 20, let's call it 15, we are in a rip-roaring bull market again, and just keep on trending the upside. So at that point, to me, a low VIX doesn't mean that you need to get out of your positions. A low VIX simply means you should be managing your positions with maybe tighter stop losses because it's been running very strong and very healthy to the upside. So, I'm a fan.
Don't know. Sorry to interrupt you. Yeah. A lot of people don't know you can trade the VIX.
Right.
If you wanted to trade options on the VIX, you can trade options on the VIX right now.
Yeah, and there's a lot of, it's not just the VIX, but there's also a ton of derivatives out there. I will say this as a cautionary note. Be careful with a lot of these TVIX, double, triple VIX ones there. You're doing a leveraged asset on a leveraged asset of a derivative. It's like, wow, that's a recipe for disaster. But just be careful with those ones out there.
Yeah, especially 3 times. There's opportunity to make 3 times the amount of money, but there's also the potential to lose 3 times the amount of money that you're putting up. So yes, I would completely agree. I'm not a big fan of trying to do the 2-3 time inverse ETFs. I just think they're a little too risky.
Mm-hmm. Going back to the vaccine, I'm going to dig deep into my brain here, which I'm losing memories faster and faster. But with regards to the vaccine, a gentleman sent me an email that was saying, I think it might have been you, Jeff, saying that by getting this vaccine and pushing it through so quickly, there's, indemnity, where the issue where the vaccine will not be responsible for any health issues going forward because of it, because it's an emergency thing. They're cleared of any wrongdoing. That should also be a very cautionary note to everybody out there. Basically, I created a drug that hasn't really been tested, maybe on lab rats, but not really human tests for any length of time. And you're going to be forced to take it, but I'm not going to be held accountable for anything that should happen to you. That eyeball falls out, not my problem. Leg goes away or third arm pops up, hey, you were on your own. You took this. Anyway.
I kind of would like to see you like that, with like one big eye popping out of you.
No, nobody wants to see that. That's gross. All right, let me, and you guys, if you have I'm curious from the audience, what do you think are some of the major issues, either pro or con, for our markets going forward? For me, the major one is still going to be the Fed and government, right? They're going to be continually pumping money in. We know that we're probably going to get stimulus. My guess is you might hear something tomorrow about it, because tomorrow is government shutdown day, folks. You know that. They kicked the can down the road from October 1st to December 11th. My guess is they're not going to agree on a budget. They'll probably kick the can down the road further. But think of how inept and colossally stupid our politicians will look if they can't agree on any sort of budget for our economy going forward, and they can't agree on a stimulus. They're going to have to do something just to save face here. Otherwise, why the hell do we vote any of them, Democrat, Republican, Independent, in office if they can't do their simple jobs? I think they have to do something by the end of the week.
Well, be careful, because here's the thing that most people don't realize. When you hear the word government shutdown, even though these politicians are government employees, they don't seem to be part of the shutdown. They still get paid. And so as a result, if it's not personally affecting them, remember, a lot of them live in bubbles, right? They're millionaires. They don't have to deal with anything. Everything's taken care of for them. So at the end of the day, they're not really worried about where their next meal's coming or the next paycheck's coming. But all these other people, it's like America's suffering from a real bad case of lack of empathy. Mm-hmm. It's just amazing how everyone's just become very okay with this at Capitol Hill. It's like, what is being discussed? So I agree with you. And my feeling is that they should be outed if they can't get this done. Now, interestingly enough, because I love the history of it, California's constitution, very different. I remember a few years back, Governor Jerry Brown, they could not agree on a budget. And Brown basically said, because it was in the Constitution, he evoked that if the budget is not approved, everybody doesn't get paid, and it's not retro once the budget is passed. Guess how many days it took to pass the budget?
It got solved quick.
48 hours there was a budget. And until we get serious, and we got to start holding these politicians accountable, again, we're dumb enough to keep electing them in. So we've got to figure out.
But what choice do we have? It's like if I have two hot, steaming piles of poop in front of me, and I got to go, hey, one of these is going to take that Senate seat. No, this one has less flies. I don't know. We need more choices. And term limits. I see Big Ed says term limits. 100%, man. Give me some term limits.
No insider trading, going on the regular healthcare plans everybody has. No more pensions. Go on a 401k. This is total leadership in the standpoint of do not lead by example. Lead by the fact that they're not going to be applied to the same rules that they're writing for every American to follow.
Let's see.
Boom.
Yeah, there's a couple of other great comments in here. I think you guys are right. I think Les says GA Senate runoff. This is also a really critical one. And I'm hearing things about how in Georgia, a lot of people actually voted for Biden, but then voted Republican all down for every other office. And now because of some of their disdain and because of things that Trump is doing, they're worried that they may actually lose some of the Republican seats in the House and Senate. So who knows how that's all going to pan out, but it could totally cause a shift of power. That is obviously another big one for us going forward. But to me, number one is the Fed. We'll have to keep an eye on how the Federal Reserve appointment goes the Treasury appointment goes under Biden. But I don't see any end in sight to the Fed doing whatever they can and the government continuing to print money for the market. So there was a question here that said, is the next wave of the pandemic and shutting down the economy, is that going to crash the markets? Go ahead.
I'm saying it could, because again, you got to think about it. There's news, like Merlin said, they've already kind of baked in everything that's going on. And so what we want to keep our eye on with the VIX is when it gets to that point where everybody's at, the party's over, we're oversold again, they're just going to flip a switch like they did. And it's going to become that. We all knew that there was the pandemic earlier than the end of February, right? We knew about it going into January. The problem is we got to ask ourselves, what has the government really done to stop this from what it was months ago? Now, again, maybe there's nothing that can be done. It's just another pandemic that's got to run its course. Unfortunately, there's a lot of casualty to this. So we wanted this to end quickly, but at the same time, I think the market's just going to get to a point and they're going to do the same thing, and they'll make an excuse of the most perfect one to me would be we're getting into the next major wave that should be quote unquote worse than the first one. Right. So that's immediately putting fear out there, and that's what the markets love. crowd. They love when there's blood in the water. So at some point, they're going to do the same thing. And you can see it was just literally parabolic in terms of how the VIX and the volatility is shot up.
Oh, yeah, so early 2020.
Yeah, so if you were on the right side of that position, it was a great opportunity. I mean, don't get me wrong. People on Wall Street made a lot of money.
Yeah.
Problem is, we are the casualties of war through all of this, and everything's just feeling very political to me. And so, who knows what's going to happen? All I know is that I'm very nervous that if we were ever to pull back the balance sheet and really see what's going on, I think this is much worse than the 1920s. And I think we keep comparing to the 1920s, but we just got to be diligent. How can you protect yourself right now? And I always like to end with this thought, Merlin. One of my favorite movies is The Pursuit of Happiness, the Chris Gardner story. He was portrayed, Will Smith portrayed him in the movie. But one of my favorite lines that Chris Gardner's mother said to him when he was very young, "The cavalry ain't coming." So you got to figure this out on your own. And if you're not educated, get yourself educated, because it took a long time to come back from 2008. And we don't know what's out there. And I got to presume, since there's been no legislation, no one going to jail, this is probably going to look a lot worse if new things come to light that we're not even aware of.
Yeah, and you compare it to the Great Depression, and while I agree with you, the difference is the spending, the amount of debt we put in. And it raises the question, if we were going to the extreme one side of it, you could have a situation where we end up defaulting on our debt because it's insurmountable right now at current levels. And if we do more COVID relief and stimulus and stuff like that, it's going to be, we're talking $6, $7, $8 trillion deficit. Gosh, I miss the early 2000s with Clinton and a budget surplus. That was the good old days.
Well, now especially, and you might want to just touch on this, Fed coin and all these other things that are now starting to happen. Is this just a global reset? Is it a way to get people onto a new, more globalized standard that things are going to change again? It's hard to say.
It's interesting. There was a comment in here talking about interest rates back to the 15%. I don't remember that because I wasn't borrowing money as a 14-year-old and 15-year-old or in my teens.
79.80, Merlin. It was ugly out there.
Yeah, real high rates. 60. I can't imagine right now locking in a mortgage at 15%. I mean, just it'd be incredible how much extra you'd be paying for that. I'm pretty happy to be locked in sub 3. Let me go to a couple listener questions here, and if you guys, I love the discussion. You got some great chat. Keep it coming. I'll integrate it in today's show. This question came in from Esther, and there's actually two of them that I think maybe you and I could get into because we are in a situation where I think both of these are relevant. The first one is from Esther. What do you use to evaluate market conditions, i.e., identify when it's overheating, overextended, sector rotation, etc.? So what sort of tools are you looking at to see if this market is in fact overextending itself?
Well, I like the VIX. I like using a monthly chart. I look at some technical analysis indicators. Obviously, the simpler ones to find are the double tops, double bottoms, because they are usually signaling a trend reversal. Mm-hmm. You can go out to stock charts, free stock charts. Is it stock charts or freestockcharts.com? And they actually, you can put in all the sectors of the S&P.
Yeah, it's stockcharts.com.
Yep, and you can just see how they're rotating right now. And there's some that do much better in a much more bullish market, and others that do better in a bearish market. And then there's some that do better in between those markets. So the hardest thing I would not suggest is don't try to call a top or bottom. There's no reason to do so. Wait for that opportunity where you feel that there's been a change of sentiment, and that's where I normally will look at it. So I'm looking at big candles that might exceed its average 2 range for the day. I'm looking at situations where we're creating wicks up top, which is saying that there's obviously some selling up there coming back. So it's just a matter of time, but that's my thing. I'm looking for an area where, these parabolic moves like we see in the VIX, if we see those on charts, it can't sustain when it's this parabolic. At some point, the markets are going to have to say, there's no more demand. It's going to start going into supply. So those are some of the things that I like to use.
I'm a rate of change type of person. I like to look at how quickly things have moved. And, one of the head scratchers going on right now is the Russell 2000. We have seen a move in the Russell 2000 in the last 30 days that is equal to 2 years worth of average rate of return for the Russell 2000. And I've got that chart up here for you guys. I'll just show you the percentage I'm talking about. And it is a ridiculous rally. I mean, like down days? Nah, we don't need any down days. 27% in the last 40 days for the Russell 2000. And put that into perspective, the S&P 500 moves between 8 and 10% per year. You're already almost triple that in 1 month, a little over a month. Pretty phenomenal. And this is kind of those things I look at as far as something being overextended. It's just, for me, usually it's a visual piece. The challenge here, Esther, is when I look at something like this, yes, it's overextended. Yes, it doesn't make sense. It should rally this much as the other indexes, and I'll show you the NQ. They're still going up, but nowhere near as a torrid pace on the S&P and in the NASDAQ. That Russell just in a league of its own right now. The challenge is, when am I going to sell this? Or why would I sell this? Because I have nothing to look at as far as a supply zone. So the only thing you can say here is to protect your positions if you have anything long on the Russell. The only reason you should be shorting it is if it proves that it's trending back down, meaning it makes a double top like Larry says. Using something like stochastics, Bollinger Bands, RSI, is not going to help you on a chart like this. I know a lot of traders like to look at that stuff. Let me show you real quick. I can tell you right now, if I put a Bollinger Bands, it's overbought. It's upper Bollinger Band. It pierced it yesterday. You want to look at RSI? Let's throw RSI on here. Why not? That's a popular one. It's overbought. It's over 70. Okay. You don't need any indicators to look at this chart and say it's overbought. I can see it. It's really difficult to find a shorting opportunity. Now, if this was coming up into a strong area of supply, I would change my tune dramatically and look for shorting opportunities. But for now, it's just buy the dips on these indexes until they start to make a downtrend.
Right. And I think that's the only thing we can do at this point. It's just, I'm not going to go out there and put my neck there to start predicting a market top at this point. We saw that happen a couple of times. It didn't work well for us. So, there's just no rules at this point because everything is going higher and we just have to wait to see what the markets want to do. And again, to your point, we don't really know what the new administration is going to look like. But it was fascinating to hear that the FTC and I think it was 40 states are now going after Facebook for antitrust.
Yeah.
So, again, the parallels to the 1920s where we started to see government going after the monopolies.
Yeah.
Well, we have our own version of monopolies. The only one I think they're not going to touch is Google because Google knows too much.
Did you see there's a really funny meme, and it was called Monopoly 2020, and so it had the Monopoly board all the way around, and every square was go to jail.
Yeah, no, I mean it's just this is unprecedented times. I mean we're kind of coming off this party again, and it really depends upon what's going to happen next. And like you said, we don't quite know, and I don't think the Biden administration is going to be sharing too much until maybe Monday. They'll finally have some resolution when the Electoral College finally votes. But it's just I think there's a lot of unknowns. We just seem to be going higher, and wait for that double top, wait for that double bottom, and just be careful that if you're going to take those trades at all-time highs, keep very tight stops, like you said, and maybe not trade the position you would normally trade.
Yeah. You mentioned antitrust. I'm kind of scrolling through here because I saw somebody had mentioned, Chrissy says, Facebook may be the next AOL. I don't know if it would be that extreme. I think AOL just missed the boat on a lot of technology, but Facebook could be faced with some significant challenges going forward. I'm going to bring up the chart of Facebook here just so we can kind of talk about it because I think there's been some other questions about the different FANG stocks moving these markets up. Here is your Facebook chart, everybody. And, for the better part of, I don't know, since September on, hasn't done much, right? I say hasn't done much. It's bounced between 240 and 300, so a $60 move is pretty damn good. But it's really range bound. a slight uptrend now if you look at that chart. But this was the lead dog. This is what brought us to all-time highs, and now it's faltering. Any take on Facebook?
Yeah, I mean, look, it's very interesting because, again, when the government gets involved, you're going to feel some pain. But this is where I give the big but. The same thing happened years ago. I'm talking like 20 years ago with the Philip Morris. Mm-hmm. And all of a sudden when the tobacco industry was under fire, remember that? And they were doing secondhand smoke, lawsuits. And what wound up happening was the states lost. Yeah. And it really hammered the stock. So it's one of those type of things where Warren Buffett has a great quote, whether he came up with it or not, because I see it in different incarnations. But I always love the quote that said, "Be greedy when others are fearful. be fearful when others are greedy. So if all of a sudden Facebook takes a dive, and you and I had this conversation, remember when Zuckerberg went to the hill, there was a sell-off on Facebook, and what did I tell you we should be doing?
Buy dip. Yep.
Right, and that's what happened. So we might have a similar thing occur. Wait to see where this is going to land. But the thing, it's interesting, and I don't have Facebook right now, but the fact is, any dividend-bearing stock that goes through something like that, as price falls, the dividend yield will go up. So those are the kind of stocks you want to hold on to in those kind of corrective bearish markets where you're getting paid a certain percentage in dividends every single quarter while you're waiting for the market to turn. So that's worked out really well at Philip Morris. But yeah, who's to say? I mean, we could go back to testing. I'm looking at the chart too. I think we could come back and maybe retest around 212 again. That area again. I kind of like that spot.
Mm-hmm.
And we had the last retest. And so that could be, from where we are right now, a 60-point drop. And then if it rebounds again, it's like that roller coaster ride on NVDA that someone wanted me to sell at 60.
Hey, leave me alone. Yeah. I said you're up 100%, dump it. And the thing hit, say, almost $600. That is pretty crazy.
Well, again, it's all about the valuation. So interestingly enough, believe it or not, I'm feeling that Facebook right now is pretty much trading where it should be trading. So it's really going to be what happens next. And what I think they're going to do is they're going to force them to sell Instagram. They're going to force them to sell WhatsApp. And they might keep Facebook as is, but they'll find them something. They'll find something that they can slap an antitrust suit against. The government's in the business of I don't want to use that word, but the R word of businesses, right? They get too big. They figure, there's money here. This is how we can offset the debt. And who knows? Who knows what the final settlement will be with Facebook?
Now that you talked about valuations, and I had NVIDIA up there, and guys, one of the things that, if you're new, Larry does a lot. NVDA. Larry, when I was doing power trading radio, used to come on all the time, and he would kind of break down from a fundamental perspective specific companies he thought were noteworthy and created a portfolio of them. And back, I think it was $38, Larry brought this into my attention. And when he told me about it, it was at $60. And I'm like, hey, I think you might want to lock in some profit there, because I'm the type of person, 100% gain or close to 100% gain, I'm taking my profits. There's no doubt about it. And this thing continued to run up to over $500, almost $600. I believe when you told me about it, you said that your valuation was something like $350 or $400. It's at $518 right now. Is there a point where this thing is overvalued for you?
Well, again, it becomes a point of having to rerun evaluations. But yeah, if I've all of a sudden got to this point where it's where I want to be, then you have to make the decision of, do you take your initial investment off the table?
Mm-hmm.
Let play with the house's money, have certain rules about how long you want to hold something to, and where is your point of selling. You can always get out, and then when it pulls back, get back in again and ride it up a little bit. But, there was very specific reasons you and I looked at this back in 2015, because all of a sudden there was this pushback on driverless cars. And the chairman at the time said they wanted to be the premier chip maker for all of the self-driving cars. So really what the future holds is two things. Which companies will evolve from this stronger because they have a product or service that everybody needs, because those are things that people will continue to buy, versus nice to haves. Yeah. And so, I would bring up PG right now. Take a look at PG since February. I'm going to look at it.
Is it 13? PG
no.
13? Come on. Thanks, folks. I'm here all day. Okay, Procter & Gamble. Yeah, not looking so hot right now.
No, but look at it in February when all of a sudden you had this big, strong rally up. Why? Because people were screaming for toilet paper, right?
So, yeah.
I mean, think about it. Right around the time it was down under 100, now it's at 150. So that was a 50% gain in a matter of the year. That's pretty decent when you're talking about stocks at that point. So again, now you're starting to see what? You're starting to see that double top, aren't we, on the weekly? So this might be the point that you might want to wait. And we got a little bit of a retest here into an area. I just want to get a little bit below that low and let it retest back up again. And you might have a nice drop down, be able to do a short or an option on it.
Yeah. All right, back to Esther's question. So that was the first one, was about, what do you look for overextended? To me, Esther, it's all about looking visually to see. You can use a million different indicators to help confirm that, but once you understand price, you can remove your RSI, stochastics, Bollinger Bands, and just look at price for overextended, how fast something moves away from its norm. Moving averages are also good for that because it tells you historically how much it moves. The second part of her question was, how do you use options volume, put call ratios, etc. to evaluate the market? Larry, you're more active in the option world than I am. Do you use put call ratios and volumes to identify levels?
No, some people I know use that. The reason I don't is it just gives you a ratio of puts to calls, but it doesn't really break down are there more buyers than sellers. So my rule is always, like we teach at the academy, I am a very volume-based trader. I'm also somebody that is looking for opportunities based on price movement. So I don't really pay attention to that. I'm looking more of where there's that opportunity. So one thing that I highly recommend if people are trading options, there's really three elements to option trading, which is a little different than maybe futures or something else. So you have price movement, you have time. We already know that there's a contract that will eventually expire, but it's volatility that separates options from every other asset class, because the volatility alone can either drive your premium or it could crush your premium. And so people don't really understand that relationship, and most people don't even understand that there is a volume component, because volume works differently than, say, futures. In the world of futures, the spread gets wider and you have to pay more in margin to get into the trades. Here, it's a little bit different in the world of options. So there are definitely rules and strategies based on where volatility resides, where I'd want to be a buyer or a seller.
All right, and I don't use option volume or open interest. It's nice. At least I use open interest in the perspective of it tells me whether something is liquid enough for me to be trading. Right. That's one area, but I don't use it as far as targeting levels. I had a trader years ago try to teach me that methodology, and I just found it didn't really work for me, so I dumped it.
Well, one thing to also put in there, the open interest is important to determine the liquidity of an option if it's something you're planning to trade for a longer period of time, right? Mm-hmm. But if I'm going into an earnings play, I'm not really caring about the open interest. I'm caring more about, obviously I don't want the spread to be too wide, but I'm looking at price moving in a smaller period of time and really just taking advantage of value changing and the price movement.
On that note, since you talked about the spread and things, that's actually part of the options class. You guys, Larry did a tremendous amount of work and recording a bunch of videos with me. We recorded the final video last week. I think it was last week, a week or two ago. So hopefully those of you who are part of the on-demand world will see some options material come out here soon. They're still doing some labs and assessment stuff that's going to be going in with that. But options one, do you have a timeline for that one?
They're talking about end of the year, but I can tell you that I'm going to be hosting an options elevate session with Nihal Shahar on the 28th of December. So wow. I'm really excited about doing that. We're going to share some of the new innovations in Click, but we're also going to be talking about just those parts of options that most people don't focus on. It's a great asset. The problem is most people have learned the wrong way. So there's definitely a right way and a wrong way of doing it. And I really encourage people, it's a great asset class to have in your portfolio, especially now when we know that the markets might turn. You can actually use it for protection as well as looking for opportunity.
One more question, then I'll find out what your schedule looks like. Drew, good to have you with us, my friend. He says, with high volatility, do we use bull put instead of calls?
Okay, that depends upon, again, what you're looking to accomplish, because some might do out of the money calls if it makes sense and they expect a lot of volatility to crush. Others feel more comfortable doing credit spreads. So the key thing here is, and I hear it all the time, they'll say, well, 80% of the time the options expire worthless, so you should only be selling premium. That's great if that's your rule, but I can tell you that it really depends upon if there's a lot of room to move and I have a good runway right now, then I might be more comfortable buying options. I'm not afraid to buy options. Mm-hmm. A lot of people are. It's just understanding the rules involved with it where it makes the most sense.
Yeah, and I agree, Drew. I don't think we can put a blanket statement saying you have to use this strategy, this strategy. It depends on, are you in the money, out of the money, how high that volatility is, time horizon. I mean, there's a lot of different variables in there.
And your account size. Some people do the credit spreads because it's cheaper than if they had to go out and buy the premium on some of these high-flying stocks right now.
Larry, every time I walk by your office, you're always so dang busy. I know you worked on a ton of content for me and the education team helping out with the options. What's next on your plate? You got some classes here people can attend?
Yeah, like I said, I'm going to be doing the Elevate sessions. That's probably primarily my focus coming into the end of the year. I may do some teaching into next year. I've been primarily, like you said, head down. But what I've been doing on Fridays in the Mastermind Clubhouse is teaching a strategy on time decay. So a lot of people are always wondering, hey, on the day of expiration, is there a play? And so I like to show the students a couple of strategies that I've used in the past that I think are helpful. And if you're a Mastermind student, I do this at 10 a.m. Pacific time on Friday. So I'll be in the room tomorrow at 10 a.m.
There you go. All right, Larry. Well, thank you for coming on. I don't know if we'll get you on before the end of the year, so I'm sure I'll see you around the office, but I hope you and Dottie have a fantastic holiday season, and I look forward to more show appearances in 2021.
Thank you, and to you and Katie as well. Have a great holiday season, and I'll see you around the office.
All right, thanks, Larry.
Hope to see everybody soon.
Right,
bye.
All right, buddy, that was Larry Jacobson giving us some insights into overall markets, how they're performing, maybe the feast or famine for 2021. Who knows? I mean, my gut tells me we'll probably see a little bit of a retracement, but I've been wrong for the past couple of years, so I'm not even going to make any forecasts out there. Lots of activity and volatility, I think, is the theme for 2021, as there's a lot of uncertainties, certainly with President Biden and his administration, with COVID and all this stuff. Expect more volatility, which I love. I think it's great for everyone out there because it means opportunity when these things move up and down. If you wanted to see Larry, he will be in the Mastermind Clubhouse, as he mentioned, at 10 a.m. Pacific time, doing some options trading for you. So I would encourage you, if you're a Mastermind, to jump in there and check that one out. All right, let me go to, I had some economic calendar and earnings calendar information here, so let me real quickly bring that one up just so we can, and I forgot the earnings calendar stuff for today because Costco didn't report earnings yet. Here's what I have cooking for tomorrow, this is today with regards to economic calendar. Now, the reason I brought this one up is there are a couple of things that we want to be paying attention to, or at least an eyeball on, and that was the inflation numbers and the unemployment claims. As you can see here, they were expecting unemployment claims to rise ever so slightly by 8,000 or something like that. It rose considerably more, 140,000 more than expected, or more than the previous number for unemployment claims. That's not that good of a sign. Of course, we know that's going to happen here simply because we're going into the lockdown. I know several people who are now out of work again because their businesses have shut down, so they're back doing unemployment claims. So that's obviously one of the important pieces for today's number. Right above that, you see CPI. It was expected to go from no change to a slight increase of 0.1%. Came out at 0.2%. Now, that's not, overly scary, but it is a rise above expectations. To me, we need to see a string of rises before we start worrying about inflation, but that's what that number is representing, is the inflationary pressure there. For tomorrow, or this is for today, and of course, I don't have it up here, so I will bring it over here and just show you guys. Here is the earnings calendar for today. Costco just finally reported they're up just ever so slightly in the after-hour session, but they beat, almost everybody beat today if you look at this list. The only one who didn't was Sienna. But yeah, Lululemon, of course, knocking it out of the park because, hey, everybody wants to get stretch pants and work out from home. I'm in a pair of stretch pants right now. You also have Adobe, Avgo, which I'll never get used to. I used to trade Broadcom every single day for about 2 years, and now they changed their symbol to AVGO. It always throws me off. But Costco showing some nice results on their earnings, earning $229 versus $204 after hours. All right, now I want to go to the final piece, which is what to expect for tomorrow's economic calendar. We do have a couple of things that are noteworthy here. Most of it circles around the U.S., so I'll throw a little red box around it for you. Number one is you have an EU summit tomorrow. We don't really know what the talk track is there, but it usually is going to paint an uglier picture for their economy so they can be more accommodative with regards to the Fed policies going forward. Now, for the U.S., you have PPI numbers, so they're expecting producer price index numbers to drop. I'd be interested to see what that final number is because we had CPI numbers rise today. We might see PPI numbers rise as well. And that is pretty much it for your economic calendar for tomorrow. Now, tomorrow's guest on the program, I'm going to have Don Frun. You guys might be following the Don Frun show as well on YouTube. We're probably going to go back and forth about different charts and markets and analysis and things like that. A lot to talk about. So Don Frun will be the guest on tomorrow's show. Hopefully you guys will join us there. Yes, don't worry, Jeff. I won't be standing up in my Lululemon pants. I normally don't wear pants on the show, so I figured why not wear some stretch pants just for fun. The elevate sessions, elevate session. You know what? They got so many different things. I should have asked Larry when I was there because I believe the elevate sessions is if I'm not mistaken, it's a structured progress. It just kind of maps out the entire process from going from absolute neophyte knowing nothing to getting up to that mastermind level and all the different steps and resources and pieces along the way. That's what I think. I could be wrong. All right, let's go to crude oil. Chrissy wants to know about crude oil. Loving it, right? You've had a great rally over the past, not an extended period of time, but it's been rallying pretty good. Here is the crude oil chart. Now, I was eyeballing back in the day a break above this line right here. Bring that back up. And it just never seemed to get above it. And we finally got above that 44 mark, started to fill that gap. My expectation is we would fill that gap pretty quickly. As I've been mentioning, my target on this was 48. And today, if you'll notice, your intraday high was 47.74. Now, it's not exactly 48. It's more like 48.79, but I think it's going to be closing that gap. That's really what I was targeting here. I think you'll probably see it head there, right? You've got a couple different things fueling that. If we take a peek at that dollar index, here's your dollar index, which has been just in an absolute free fall. I still think you're going to see the dollar index go lower. There is some demand. Let's go to a weekly. There is some demand a little bit lower, getting down to that 90 mark, right? So 90 becomes a very logical target on this one for the dollar index. If that were to happen, that means that crude oil would probably see some more upside potential, a little bit more of a pop. And I think that gap closing would be the easy one. Now, the question becomes, after we close that gap, what happens? You look at the daily chart here, there are some other levels. I'll move these lines up. You're looking somewhere right around that $55 mark. And then, of course, the big daddy is going to be up here right around 61.50. So yeah, don't fight that trend with don't fight that CL trend. Go with it. I don't know, Christy said, should you sell your position? No, I don't think you should. If you're long, I don't think you should sell your position. I think you should just kind of let it run and keep it going, right? Move your stop loss up. Why do pro traders hate on technical analysis? Well, yeah, Alan, I saw your first email. I didn't see the second link. You were talking about a link that was not viewing too kindly of specific educational firms, which I'll check that out. But the reason people don't like technical analysis is many of them believe that it's voodoo, it's smoke and mirrors. And usually those are people who are going to be more fundamentals. A long-term investor is more in tune with the fundamentals. I assure you Warren Buffett's not out there looking at a 5-minute chart or a 50-minute chart or any sort of charts on a specific company. He's saying, show me the balance sheets. Is this thing undervalued or overvalued? That's all I'm really looking at. Those people will always hate on technical analysis. And it's been this boxing match going on as long as trading has been going on, where one side just doesn't agree with the other one. Look, you can love it or hate it. I think technical analysis is great because it paints a picture of price. Everything that you see on this screen right now, everything that you see on that screen, there's red and green candles, is simply a transaction. And I want you guys to view it from a different perspective. If anybody here have tattoos, I'm sure some of you guys have tattoos. The giant one that I got across my chest that says Mom, extremely painful, but it started off as one little pinprick, right? With the first little needle poke, it was a dot. It didn't mean anything. But the more that they kept moving the needle and stringing together all of those dots, it starts to paint a picture about what's going on with that picture. In this case, for me, stocks are no different. Every transaction that goes through is like a pinprick from that tattoo gun. And as you string together thousands and thousands and thousands of them, I believe it paints a picture of what price is doing. And to me, it's a study of behavioral analysis. I can see fear. I can see greed. I can see complacency. I can see when there's climactic volume or people panicking. I love that type of stuff. And I think I can see it on a chart. I'm not saying that technical analysis is infallible and it's 100%. Guys, there's so many times where I am dead wrong. It's fine. But I'm using it for me to keep myself on the right side of a trade. I'm using it to increase my probability of making the right trade. And unfortunately, I think if I didn't have the charts, I wouldn't be I wouldn't be the same type of trader, because I like to look at the charts to help me make my opinions, not fundamentals. Big Ed says fundamentals for longs, technicals, trading for me. Yeah, I think that's probably what most people are looking at, right? They are looking at a combination of them. After my collegiate career and looking at fundamentals, I don't care for fundamentals. I believe that they can cook the books. To me, the price chart tells you what you really need to know. And again, that'll be an argument that'll go back and forth until the end of time. I don't usually hold things that long term, so the fundamental side is out the window for me anyway. Okay, Big Eb's throwing those questions out because he thinks he's going to draw me on for another 5 minutes so I can go an hour, but no. Personally, I don't know how you could trade fundamentals. Jerry, you really wouldn't be trading. You'd be more investing. You'd be going more long term in buying things that you perceive to be undervalued. You look at that chart that Larry was talking about earlier on NVDA. He was in this thing at 38. I'm going to go all the way back to, I'll mark off $38 on the screen here so you guys can see where that is. I mean, I got to go way back on this bad boy to show you. It's not even on, I have to go back to a monthly. I mean, that's how far back this thing was to go to 38. 38. And you guys, the archives of Power Trading Radio, I'll show you the date. Actually, he was looking at it when it was at 38, which is back into 2016. When he came on Power Trading Radio, it was at, I remember it was at 60 or 60 something, which would have put it right around in the middle of 2016, maybe October, September, somewhere in there. And I told him, man, if it was me, I'd sell out. I would close my position. And, who's laughing now? The fundamental guy is the one who's laughing. I'm more of a trader, so I would have gotten out and had a nice profit at $60. But, if you're still holding this thing for years later, that's a monstrous gain, crazy rate of return. And, that's just the difference of different breed, different styles of trading, just how the cookie crumbles. All right. That's going to do it for me for today, everybody. Don Fron, as I mentioned, will be the guest on tomorrow's show. If you have something you want Don and I to discuss, we'd love to get it in ahead of time. I always try to keep up with the chats, but sometimes those chats go a little too fast for me and I can't keep up with it and talk and move charts and administer everything that needs to go for the show. So if you send those on in at TraderMerlin, you can go to TraderMerlin.com or just email me at the name on your screen right now, which is TraderMerlin@gmail.com. Best thing to do, though, is put it down in the comments below the YouTube video. That's the easiest thing for me to see. It's the first thing I check, and also it allows me to maybe go up a little bit in search engine rankings. All right, Alan says talk about Tesla. Okay, fine. I have a feeling I'm going to do it briefly, Alan, because I think Don and I are going to probably talk a lot about that tomorrow. But Tesla, just on fire. I mean, Tesla is just ridiculous. Tesla's one of those ones you just get, again, shake your head at. I'm staying away from it. You had a $60 move today in Tesla? Its low point was 566. Its high was 627. So it moved $60 intraday. That is a pretty substantial move. That's a 10% swing in one day, although it's still not back up to its highs. Look, I'm not that optimistic on Tesla. I'm staying away from it till it's added to the S&P 500. Once it gets added to the S&P 500 and the dust settles and funds allocate their money into Tesla like they need to, then I will make an opinion about it. But right now, it's too wild when it's being added to the S&P 500 at a deadline date. So I'll stay away from that one. But I will bring that up with Don tomorrow. All right. That's cool. Thanks, everybody. Hope you enjoyed today's show. If you like Larry Jacobson, you can always catch him in the Mastermind session on Fridays at 10 a.m. Pacific time. Other than that, he'll do a couple classes here and there, and I'm going to try to keep bringing him back on the show because I love Larry. He's just awesome. Anyway, I love you all. Thanks so much. Have a fantastic remainder of your day, and I'll see you guys tomorrow with Don Fron. Take care.